What's up, folks? Heine's Morning Update, March 13th. I did roll yesterday, reluctantly. I hate rolling, but here's where we're at. So, it takes a while for me to get my bearings straight with levels because of the roll. But 93 is going to be a big one. You opened up here at 42.38, at 40 now. Yesterday was kind of a grind higher, so we did a gap and go on the SPX. I'll show that in a second. Upside, I don't know. I'll probably rely on this, the 42.65, 42.91. Any odd number or even number, is probably going to be it. Since we're already at pretty much 42.50, we get above that, then the logical upside is 5,300. It's just kind of where we're looking at. 94 is your S1. I do like that a lot. 52.20 is your pivot. My magic green line is going to be a little bit before it gets more accurate. 51.71 is a now. So we will see, because again, that roll gap, and there's a way on the charts to make it all fluid, but it alters the older levels, so I don't. Here's your last gap from March. We rolled into March here, this gap here, and we pretty much just went straight up, all the way up. And then we have another roll gap here, and I don't know if we just continue, who knows. This, stocks go up, and it's nuts. This is just kind of how we are right now. 51.02 is still the monthly pivot, even though we did. Here's your roll gap on that. 51.55. So we'll see. Here's your weekly. Obviously now it's way above my 51.66. I mean, do we hit R2 at 55.20? I don't know. That's pretty exuberant. We will see, But if you look, post-COVID, we did the same thing. We went, all the way up. So that was, a year, 2 years. So, if that's the case, we're only in infancy, and we can go for another year or so. I don't know. A lot of speculation on why the bull market was. Some good discussions on Twitter. So, but no one really can nail down one specific reason. SPX cash gap 91 to 78, your only lower one. Again, yesterday we did a gap and go, right? So we went down, filled the gap, and then grinded higher. We are getting swings back, which is nice. Because before it was just these little tiddly, shit ranges where the downside would be, 5 or 6 points, and then it would rip up 10 points, and then down 5 or 6 and up 10, and it was just this steady crap. We've had some good follow through, so I'm kind of excited about that, with somewhat of a range expansion and range expansion on low vol. So that does enable those who do the deep in the money to get cheaper or less risk on a credit spread that way. Nvidia obviously higher, Apple a little bit lower, Euro up, down, flirting with the 9.5. I really think it will probably test the 110, 110 and 1, and then possibly the 11. Again, I'm just buying time. At some point, this is going to be a fantastic short. Interesting that it's higher, because Europe just came out with some terrible numbers, but maybe they're going through the same thing. DAX made an all-time high yesterday as well. So it's just market exuberance, or this is just capital flight, and people are their money's just fleeing to equities looking for safe haven, which could very well be. Bond auction at 1 p.m. is really the only news, and then we have PPI tomorrow. So we could see a consolidation into 1 p.m., maybe a move on the bond auction. The 10-year was subpar. It was the rate was higher, and the bid to cover was lower, which equals a subpar bond auction, but not enough to affect the market. They brushed it off. So we'll see if the 30-year is going to be, if the 30-year has a subpar, then there might be some interesting takes. Tilt is dropping. So I would put tilt on your stuff, because this is, I think that this is going to become something that everyone's going to want to watch. So here's tilt flirting with the 50-day right now. Does have a gap down to 94, but this is the low in October. So the October QRA was one. This was a level that risked a bidless market in the bonds. So remember, fundamentally, crashes don't come from the top, they come from the bottom. So when you grind down to a certain level and then the bottom falls out is pretty much when the crashes come. That's just kind of historic, right? We don't go all the way up and then crash immediately. It'll be a grind to a level of puke, and then it will just go. And in the bonds, you can get what's called a no bid. So nobody will be bid, and this will just free fall. Like that's called a credit event. I'm not saying we're going to get a credit event. What I'm saying is this is starting to look like we could head back down into this 82 level. And if we grind down into the 82 level and lose that, then we have what's called a credit event. So I am keeping an eye on this. If we were supposed to rate cut, this should be starting to go back up. But we're not. So we will see how this goes. But anyway, keep that in your charts. It's down a little bit today, but the 50-day is at 94, 92. So we're technically below that. Anyway, that's my 2 cents today. Please stay safe. Again, I think probably a consolidation day. And if the bond doesn't move it, and then for PPI tomorrow. Because that's, I think, is the bigger benchmark for inflation than CPI. Even though CPI came in hot, we dipped down and brushed it off. So as of now, again, nothing economic seems to be taking this down. So maybe it does take an outside force, non-economic outside force, to make this market go back down. If that's the case, then all these economic numbers don't matter, and we're just watching and waiting for dips to buy. Anyway, have a good day.